There are three money changes happening right now in July of 2026 that are going to directly affect your wallet, and the overwhelming majority of American seniors have no idea any of them are coming. Not one. These are not small technical adjustments buried in a government report that nobody reads. These are real, concrete changes to the money coming into your account, the money being taken out of it, and the rules governing how you can access what is yours. And the reason most people do not know about them is not because the information is hidden. It is because the people who benefit from you not knowing, the banks, the government agencies, the insurance companies, have absolutely no incentive to sit you down and explain what is changing and what it means for your specific situation. That is exactly what we are going to do today. We are going to go through all three changes one by one in plain English with no financial jargon and no complicated charts. For each change, I'm going to tell you exactly what happened, exactly who it affects, and exactly what you need to do about it before the end of July. Because for at least two of these three changes, there is a window to act right now, and that window is closing faster than most people realize. If you are over 60 years old and you receive Social Security, Medicare, or any form of retirement income, every single one of these changes applies to you. So stay with me through the full video, because the third change is the one with the most immediate financial impact, and it is also the one that virtually no mainstream financial outlet has explained clearly. Let me give you the real picture of what is happening right now in July of 2026, because the headline numbers that most people are seeing do not tell the full story. You may have heard that Social Security recipients received a cost of living adjustment earlier this year. You may have seen the number reported as a positive increase, and on paper, that number is accurate. But here's what the headlines consistently leave out. Every time Social Security benefits increase, a parallel set of adjustments happens simultaneously. Adjustments to Medicare premiums, to income thresholds, to tax treatment of benefits that quietly consume a significant portion of that increase before it ever reaches your checking account. The result for millions of seniors is a net monthly payment that is smaller in real terms than the number they were told to expect. This has happened consistently for the past several years, and in July of 2026, it is happening again in three specific ways that are hitting senior accounts harder than at any point in recent memory. The reason I am covering this today specifically, rather than waiting until the changes are more widely reported, is that the window to take protective action on two of these three changes is measured in days, not weeks. One of the changes has a practical deadline at the end of this month. Another requires you to file a specific document before August 1st of 2026 to capture a benefit that would otherwise pass you by completely. And the third requires you to check something in your account right now, today, because if the issue is already there and you do not catch it this week, it compounds every single month going forward. The first money change involves what Congress passed earlier this year, and what the mainstream financial press has been calling the senior tax bonus. Here is what actually happened, and here is what it actually means for you. As part of a broader tax package that was signed into law in 2026, Congress included a provision that increases the standard deduction for taxpayers who are 65 years of age or older. The additional deduction amount for single filers is $1,320. For married couples filing jointly where both spouses are 65 or older, the combined additional deduction is $2,640. Now, those numbers sound significant, and for the seniors they actually help, they are. But here is the critical information that is being consistently left out of the coverage. This deduction only benefits you if you owe federal income tax. If your total income falls below the threshold where you owe federal taxes, which is the case for a significant portion of seniors living primarily on Social Security, this deduction does nothing for you. It cannot reduce a tax bill that does not exist. Additionally, this deduction is not automatic. It is not being applied to your account by the IRS or the Social Security Administration. You have to claim it actively on your federal tax return, and if you have already filed your taxes for 2025 without claiming this enhanced deduction, you need to file what is called an amended return using a form called a 1040X to capture it. The 1040X is available at irs.gov. The deadline to file an amended return for the 2025 tax year is 3 years from your original filing date. But the sooner you act, the sooner any refund you are owed comes back to you. The second money change is the one that is going to surprise the most people because it involves something that most seniors assume is fixed and stable, and it turns out it is neither. It involves a new update to how the Social Security Administration processes and verifies direct deposit information for senior accounts, and it took effect at the beginning of July of 2026. Here is the background. The SSA has been dealing with a significant increase in fraudulent direct deposit change requests targeting senior accounts. People are calling in, impersonating seniors, and attempting to redirect benefit payments to different bank accounts. In response to this, the SSA implemented a new verification protocol that applies anytime your direct deposit information is flagged for review, either because you recently updated it, because your bank filed a report on your account, or because the SSA's internal system identified a discrepancy in your account information. Under the new protocol, when your account is flagged, the SSA places a temporary hold on your direct deposit while the verification is completed. During that hold, which can last anywhere from 3 to 10 business days, your payment may be delayed or redirected to a paper check sent to your address on file. For most seniors, this hold will never occur. But for seniors who recently changed banks, recently updated their SSA account information online, or whose bank account was flagged in the IRS cross-referencing process we have covered previously, the risk is real and the timing is unpredictable. The fix is simple and takes about 4 minutes. Go to ssa.gov, log into your My Social Security account, and confirm that your direct deposit information is current, accurate, and matches your active bank account exactly. If everything matches, you are protected. If there is any discrepancy, even a minor one, correct it today before the July payment cycle closes. Before we get to the third money change, which is the most financially significant of the three and the one with the hardest deadline, I want to take a moment to explain something important about why most seniors are finding out about these changes after they have already taken effect rather than before. It is not an accident. It is not incompetence on the part of the press. It is the natural result of a system where the agencies and institutions responsible for implementing these changes have no legal obligation to send you a personal notification, and where the financial media covers these changes at a level of complexity that is genuinely inaccessible to most people who are not already financial professionals. This channel exists to bridge that gap. Every single day, we go through the regulatory updates, the policy changes, the SSA announcements, the IRS guidance, and we translate it into plain English specifically for the 65 million Americans who are directly affected by it. The people who subscribe here and watch regularly find out about changes like the 3 we are covering today before those changes take effect. They have time to act. They have time to file the right form, make the right call, check the right account. The people who are not subscribed find out after, sometimes weeks after, sometimes when they open their bank account and the number is not what they expected. Subscribe right now and turn on the notification bell, because the August changes are already in the pipeline, and what we have found about what is coming next month is something every senior receiving Social Security or Medicare needs to know before it takes effect. The third money change is the most important and the one with the most immediate financial impact. It involves the Medicare Part B premium adjustment and a specific appeal process that most seniors either do not know exists or have been told does not apply to them. Here is what is happening. Medicare Part B premiums are calculated based on your income from 2 years prior. So the premiums you are paying right now in July of 2026 are based on your income from 2024. This 2-year lookback is called the Income-Related Monthly Adjustment Amount System, or IRMAA. And in July of 2026, the income thresholds for IRMAA were adjusted in a way that pushed a significant number of seniors into a higher premium bracket, without any increase in their actual current income. Here is exactly how it happened. The IRMAA income thresholds were adjusted upward by a smaller percentage than the inflation adjustment applied to required minimum distributions from retirement accounts. What that means in plain English is this. If you took a required minimum distribution from your IRA or 401k in 2024, which millions of seniors are legally required to do, that distribution may have pushed your 2024 income above the IRMAA threshold, even if your day-to-day living expenses have not changed at all. The result is a Medicare Part B premium surcharge that is being deducted from your Social Security check right now. A surcharge you may not even know is there. The specific numbers matter here, so let me give them to you clearly. The standard Medicare Part B premium for 2026 is $185 per month. If your 2024 income as a single filer was above $85,000 from any combination of Social Security, pension, IRA distributions, investment income, or any other source, you are subject to an IRMAA surcharge on top of that standard premium. The first tier surcharge adds $74.20 per month to your Medicare premium. That is an additional $890.40 per year coming directly out of your Social Security check before it reaches your bank account. Higher income tiers carry higher surcharges, up to several $1,000s per year for seniors in the upper brackets. And because this deduction happens automatically before your net Social Security payment is calculated, many seniors never notice it. They just see a smaller deposit and assume that is what they are supposed to receive. The critical piece of information, the piece that almost no one is covering clearly, is that if your income has decreased since 2024, you have the legal right to appeal your IRMAA surcharge and request a recalculation based on your current income. The form is called an SSA-44. It is 2 pages. It is available at ssa.gov. And filing it before the end of July of 2026 means that if your appeal is approved, your reduced Medicare premium could take effect as early as September, meaning you would see a higher net Social Security deposit starting with the September payment cycle. The SSA-44 appeal applies if you experienced what the SSA calls a life-changing event since the income year that your current premium is based on. And the definition of a life-changing event is significantly broader than most people realize. It includes retirement. So if you were still working in 2024 and have since retired, that qualifies. It includes the death of a spouse. It includes divorce or legal separation. It includes the loss of income-producing property, such as a rental property you no longer own. It includes a reduction in pension income. And it includes a significant reduction in self-employment income. If any of those circumstances apply to your situation, and for a very large number of seniors in July of 2026, at least one of them does, you have the legal basis to file an SSA-44 and request that your Medicare premium be recalculated. The process is straightforward. Download the SSA-44 from ssa.gov. Fill in your personal information and your Social Security number. Select the life-changing event that applies to your situation from the list provided on the form. Provide an estimate of your expected income for 2026. This does not need to be exact, just reasonable. Attach supporting documentation. For retirement, a letter from your former employer or your final pay stub is typically sufficient. Submit the form either by mailing it to your local Social Security office or by bringing it in person. If you mail it, send it certified mail and keep the tracking number. The SSA will respond within approximately 30 days. If approved, the premium reduction takes effect the following month. Let me bring all 3 changes together so you have a complete picture of what needs to happen before the end of July. The first change, the enhanced standard deduction for seniors, requires you to either claim it on your upcoming tax return or file an amended 1040X for 2025 if you have already filed and did not include it. The maximum additional deduction is $1,320 for single filers. If you owe federal income tax, this deduction reduces what you owe or increases your refund. If you do not owe federal income tax, this deduction does not apply to your situation. The second change, the new SSA Direct Deposit Verification Protocol, requires you to log into your My Social Security account at ssa.gov today and confirm that your direct deposit information is current and accurate. This takes 4 minutes, and it protects you from a payment delay that could last up to 10 business days with no warning. The third change, the Medicare IRMAA surcharge, requires you to check your current Medicare premium deduction, determine whether your income has decreased since 2024 due to a qualifying life-changing event, and if so, file the SSA-44 form before the end of July to request a premium recalculation that could increase your monthly Social Security deposit starting in September of 2026. 3 changes, 3 specific actions, each one taking less than 30 minutes. And together, they could put hundreds or even thousands of dollars back into your pocket over the course of the next 12 months. Money that is legally yours and that you are currently not receiving simply because nobody explained that you had the right to ask for it. Here's what we covered today. Three money changes took effect in July of 2026 that directly affect the finances of every American senior receiving Social Security, Medicare, or retirement income. The first is the Enhanced Senior Standard Deduction. Claim it on your tax return or file an amended 1040X if you have already filed. The second is the new SSA Direct Deposit Verification Protocol. Log into ssa.gov today and confirm your banking information is current. The third, and most financially significant, is the Medicare IRMAA surcharge and the SSA-44 appeal process that could reduce your premium and increase your monthly net payment starting in September. None of this is complicated. All of it is actionable today. And the cost of not acting, in reduced payments, in missed deductions, in premium surcharges that continue month after month, is real money that belongs in your pocket, not in a government account. If this video helped you understand what is happening and what to do about it, please share it right now with someone you know who receives Social Security or Medicare, a parent, a neighbor, a friend from church, anyone who was born before 1966 and is navigating these changes without clear information. They need this. Subscribe to Mason Parker USA, turn on the notification bell, and we will see you in the next video, where we go through what is coming in August and what you need to do before it arrives.